Hi, and welcome to CMS Forex News. My name is Christina Robinson, and today is Thursday, March 13, 2008. New Zealand's retail sales in January was purely inflation-driven. Food prices have been skyrocketing, causing total sales to increase despite flat volume. Australia's economy got a boost of 36,700 jobs in February, thanks to the strong materials demand from China. Meanwhile, the unemployment rate shrank to 4% as the participation rate remained flat. Australia has shown strong economic data and seems to be steering away from the global slowdown. The negative 2% estimate of January's Japanese industrial production was revised lower to negative 2.2%. The greenback reached a 12-year low against the Japanese yen and was trading below 100 in the European session. The U.S. session capped the steam from the dollar bears. As stocks rebounded by 2 p.m. in New York, the dollar-yen pair was up 140 pips since hitting the 12-year low. The capacity utilization was less efficient in the fourth quarter of 2007. Firms are running at 81.8% of total capacity, down from third quarter's upwardly revised 83.4%. Economists were surprised by the 0.6% decline in U.S. retail sales for February. Auto sales dipped 1.9% and sales at the pump were down 1% despite surging oil prices. Excluding autos, sales still edged down negative 0.2%. It is clear that consumers are spending less as they anticipate rougher patches to come for the U.S. economy. The weak employment data last week was a reality check for those that believe the U.S. can stave off a recession. This was another week of elevated jobless claims at 353,000. The greenback, already at a 12-year lows against the yen, nearing parity with the Swiss franc and hitting record lows against the euro on a daily basis, might have overextended its weakness in the short term. The poor fundamentals no longer have any shock value. Import prices rose a tame 0.2% in January. The Fed is hoping inflation can remain subdued as they are ensuing contractionary monetary policies. Business inventories grew faster than expected. With receding consumer spending, firms will more likely scale back their stockpiles. This was reflected by the record low of 1.25 in the inventory to sales ratio. The continuing weak data muffled what the Fed hoped to be a spark of hope for investors. Instead, the stock market started the day under, although it did manage to crawl back to positive by 1:30 p.m. Eastern Standard Time. The Euro-USD pair climbed another 50 pips to make it a total of 250 pips since Tuesday. The Swiss National Bank held rates for the second session in a row after 2 years of rate hikes. Growth expectations have been scaled back. Inflation expectations have also reduced. The Swiss franc is a safe haven alternative to the U.S. dollar and has been performing very well against the greenback. The two currencies came close to parity today, but failed to break through. It stopped at 1.0050 before the U.S. stock market snapped its decline. The Aussie yen pair followed the flow of the U.S. stock market today. Overnight, it dropped heavily, reflected by Dow Jones Industrial Average, almost 100-point drop to start the day. New York trading reversed the situation and risk appetite came back. The Australian dollar-yen pair has then paired all overnight losses and gained 200 pips by 2:30 p.m. Eastern Time. New Zealand reveals manufacturing sales data tonight. Overnight, Germany reveals inflation figures, and the Eurozone releases inflation and labor cost data. Tomorrow, Canada will release labor productivity figures. The U.S. will reveal inflation and its consumer confidence. And that's it for today in Forex. Join us again tomorrow right here at cmsfx.com.